You've already learned a lot about the types and process of reconciliation. Let's take a look at what a common bank reconciliation might look like. We're going to use the format you see here. Now, I do want to say that every company will have its own specific processes, so be sure to check in with the CPA or other financial team members for your specific procedures. But typically, a bank reconciliation will run something like this. Compare the amount of every check that was paid by the bank, cleared the bank account, with the amount of every check in the company's cash account. Any differences, such as the outstanding checks and errors, must be shown on the bank reconciliation. Compare every deposit processed by the bank with the receipts recorded in the company's cash account. Any differences, such as a deposit in transit and/or errors, must be shown on the bank reconciliation. Compare other items on the bank statement with the other items in the company's cash account. Any differences, such as bank fees, checks returned because of insufficient funds, collections made by the bank, etc., must be shown on the bank reconciliation. This brings us to step 2. Enter the unadjusted balance from the bank statement. Add any deposits in transit. These are receipts in the company's cash account that have not been processed by the bank as of the date of the bank reconciliation. Subtract any outstanding checks. These are the checks the company had issued and recorded in its cash account, but have not been paid by the bank, not cleared the bank account, as of the date of the reconciliation. Add and/or subtract other items with amounts that were incorrectly recorded by the bank. Combine the above amounts and show the total amount on the bottom line, adjusted balance per bank. Now we're ready for step 3. Adding the book side of the bank reconciliation form. Enter the adjusted balance appearing in the company's general ledger cash account. Add any increases, interest earned, bank credit memos that are shown on the bank statement but were not yet recorded in the company's cash account. Subtract any decreases, such as bank services charges, return items, bank debit memos that are shown on the bank statement but are not yet recorded in the company's cash account. Add and/or subtract other items with amounts that were incorrectly recorded by the company. Combine the amounts on the right side and show the total on the bottom line, adjusted balance per books. We're almost done. Step 4. Recording the adjusted balances, making sure the bank adjusted balance matches the book adjusted balance. Once they are confirmed, you're done. If there were any adjustments made on the book's balance, though, they need to be reflected in the company's journal as an adjusting journal entry. For example, if a $25 bank charge was on the bank statement but not recorded in the company general ledger,